Hey guys, so we had another super tight range day, and this daily candle pretty much looks exactly like the last four daily candles now. So, what do you see here? We have a nice body to the upside and a huge wick right below. You guessed it, for 11.6. So, one thing I was saying is that we've been imbalanced in this market since pretty much last middle of last week when we established that 411.2 supply and then closed over that. We attempted a couple times now to close below that, but we just cannot seem to. But we kind of rebalanced today because we established a new demand support at 411.6. So as you can see, pretty much all besides this one day here has traded over that level for quite a while now. We really are still holding though this 410.9 to 413.9, so about a $3 range for one, two, three, four, five, six, 7 closing days now. It's a long time. So we did pop through this 3-point resistance line here, so we can go ahead and take that out, which it does give us a slight favoritism to the upside. And you can see we pretty much are riding the 8 EMA support. So realistically, until we start breaking down something like this below the 8 and 20 EMA support, I still favor a neutral to bullish outlook on the daily at least. Our target really should be this 413.5 resistance, and then potentially all the way up to about this 414.8 resistance. Going over to futures, same thing. So what we did on futures though is we actually established a new demand support at 41.31, which then takes out 41.34 demand that was there. So now basically what we're seeing here is that we did not touch this resistance line, which would have been 41.60 today. That resistance line for us overnight and tomorrow is going to sit right there at 41.55. So one thing to keep in mind is that we did on Thursday reconfirm that 41.53 is supply and resistance. So this will be a big level for the bulls to try to get through. Most probable, what I'm going to see probably happen here is obviously two scenarios. With this double bottom recovery over the 8 and 20 EMA, if we can wick over 41.55 and more importantly close over 41.53, favoritism would really be to a breakout to the 4180 to 4200 area. However, if we come back and turn around and immediately put in a 4150 double top and close somewhere around this 4130 demand or even below it, we're actually going to establish a new supply just below the previous 4153 supply, which then opens up a downside target of 4095 to 4110. We're really, obviously, as you can see, with 1, 2, 3, 4, 5, 6, 7 candle bodies, all closing within a 23-ish point, 22-ish point range. This is some extreme consolidation. Probably some of the tightest consolidation I've ever seen, maybe on futures. I mean, yes, you have the wicks to the upside, but I mean, I'm talking candle bodies, which is where the majority of the price action takes, and closings all being within that tight of a closure is just really, really impressive. Take a look at the VIX here. So we did have a breakout to the upside. We broke through this resistance line. However, the big thing to note here is what? We're just consolidating. Same thing. We have this 16.8 support area right here. And then we have this resistance area right here at 17.7. And you can see we keep trying to break out over that 17.87 resistance, which you have 1, 2, 3, 4 major wicks over that. If you go look at SPY Daily, what do we see here? 1, 2, 3, 4 major wicks below what? 411.6. So this tells me if we can hold over 17.7, then the favoritism would be that we break below 411.6. However, if we break under 16.8 support, then that favoritism would be that we break over 413.5 and start testing 414.8. The VIX is still riding under the 8 EMA, as you can see, which is basically the exact opposite of what SPY is doing. The VIX actually favors that we're going to come back down into the mid 16s here before we bounce. However, this 17.1, as you can see, is a major support area. This could just immediately turn around and bounce immediately tomorrow too. The dollar did break out 2 days in a row last week, but now we've kind of retraced and we're kind of just seeing a nice rejection here. So I'm going to be looking to see if this is going to bounce and try to push up or what exactly it's going to do. But favoritism would be if the dollar is breaking out that we're going to see a breakdown of tech. 10-year did officially break out today, though, so that's a big deal here, seeing this big old resistance line break out. We still need to take out very critical resistance here at 3.522 and all the way up here at 3.607% to really feel like we're going to see some big downside. And then last thing here is Bitcoin. Bitcoin is looking pretty strong, actually, so I mentioned on Friday that we had this big old doji right here, which actually provided some upside. And I was kind of curious to see what we were going to do there. We did establish a new support down here at 26.791. And then we came back up and we actually tested previous resistance at 27.659. So with that rejection here, that actually favors a retest of 26,800. So until we lose this support here and really start testing this support line right here, favoritism is still just in consolidation. And same thing like SPY, it's just major consolidation. But kind of the trend has been come down, break out, consolidate, break down. So favoritism is that if we fail to break through this, is that it is going to continue to slowly in this bear channel slope down. All right, hope you guys had a good day trading today, and I will see you guys tomorrow.